From the floor of the CME Group, this is Danny Riley on this Tuesday, June 6th. It's quiet everywhere. And this has a lot to do with the three-day weekend, and it's also got to do with the way people are positioned. Bottom line, people are scared right now, and they're scared about the direction of the U.S. stock market in general. It's been very overbought. We've had a good move down. And on Friday, what happened, the S&P late in the day made a little bit of a rally and then sold off down to it settled at the 1014 level. Then overnight, now remember, Monday was off, so we're going to talk in terms of Monday night, and today is Tuesday. Monday night, when I got in front of the computer, the S&P was down about 11 handles. Well, initially down about 8 handles, and then down about 10 to 12 handles at its low. I think the low was 1002.75 in the mini. But a critical level that Top Notch has been pointing out is the 06 level. And when the market traded down through there and then popped back above, and then opened above the Friday's closing range of 1014, the market got a big boost. And now what they say is that there was some bargain hunting going on around in Asia and Europe, but to tell you the truth, Europe was on a 7-week low, and the way it really looked is that the market was just extremely oversold going into not really, there are no mutual fund Mondays this week, but going into the first trading day of the week, which is today. Now what's happened this morning is the S&P opened up at the 1031 and a half level, sharply higher, pulled back down to the 1029 level and held, and then waited on the 9 o'clock number of the ISM number. And as we've been pointing out, no numbers tend to be coming out very well lately, and this one came in lower than expected. Initially what the S&P did was it downticked, and then it shot higher. It got all the way up to 1038.30. Now you know what? We're not here to fight City Hall. With the market being so oversold here, and Top Notch has been saying this, he thinks we may have made a bottom or a low there, and it very well could be. You know what? The markets are so slow right now, and one of the things that we noticed this morning was somebody on CNBC said something about the euro wasn't reacting, and that based on that, the stocks would probably sell off a little bit today. Well, you know what? The euro was up 250 last Friday, and what the stock market is doing now is it's playing catch up with the up move in the euro. Also, crude oil's up about $1.50 as we speak. Going into the remainder of the day, we don't want to get in front of this. We don't want to try to step in front of it, try to be cute or be smart with this. The markets have had a lot of downside over the last several days. I think 100 handles in the last 9 trading days is what the S&P is down approximately. So with that in mind, we're not here to fight it when it does want to go up. Now we're going to kind of go back to what Tim said, that 1006 level could be a critical level, and what he is talking about, and what he told me a little while ago, is if we do retest that level, and it goes down through there and starts trading back above there, then we know we've got a good low. Like I said, for the remainder of the day, we're not going to get in front of this. We're not about trying to fight it. Over in the 10-year, you can see it all over the trading floor right now. The pits are empty. We'll be back tomorrow with another update.